Are you most worried about the US debt ceiling or the current banking turmoil?
Well, I think the debt ceiling is potentially catastrophic. So that's a whole different issue. Hopefully it won't happen. The banking crisis, I still believe, will kind of sort its way through. And it's not anything like '08 or '09. Only a couple of people are offsides with all these various things, which you knew about. So hopefully, it's getting near the tail end of that.
What do you think you would do differently if you were US Treasury Secretary Janet Yellen?
I don't know. I think we need to finish the bank crisis. I think we've had uncertain policy on mergers, this First Horizon deal. I think we have to assume there'll be a little bit more. So whatever the FDIC, the OCC, the Federal Reserve, whatever they need to do to make it better, they should do. Be thoughtful, be very forward-looking, not be surprised constantly, because some of these things have been known about for quite a while. And so we've handled three: SVB, Signature, First Republic. I think it's very important. The regional banks, who I've been speaking to like every day for the last week, they're quite strong. They're quite worried because of the run on deposits like that, but their financial results are good. Their financial results are going to be good, okay, next quarter. They're earning money, they've got very good clientele, very diversified.
If you want Janet Yellen to get the job done, what would be your comprehensive solution?
Just be prepared for problems. We don't need a comprehensive solution.
Is regulators taking action on short sellers of banks a solution to the problem in this situation?
Yes. Look, my folks would tell me that that's not the problem, the short selling ban. If you actually analyze stocks and short sales, doesn't seem that big a deal. I think they may partially be wrong. Because, as you know, some people are unscrupulous and they use other means to go short. I think that but if you look at the detail, the SEC has the enforcement capability to look at what people are doing by name in options, derivatives, short sales, and they should go. If someone's doing anything wrong, people are in collusion, or people going short and then making a tweet, about a bank, they should go after them. And vigorously, and they should be punished to the full extent the law allows it. So I think it's possible it's taking place. We have no evidence of it, but my experience in life has been, don't assume too much.
Jamie Dimon believes that a default on the US debt could have serious consequences for the global economy, potentially leading to panic in the markets. He emphasizes the importance of being cautious and avoiding situations that could cause panic, given the central role of the American financial system in the global economy. He acknowledges the wide-reaching effects of the debt ceiling issue on contracts, collateral, clearing houses, and clients around the world. He emphasizes the need for a war room to prepare for a potential default and for increased conversation with clients to help navigate the situation, overall stressing the importance of preparation and planning to minimize the potential negative effects of a default on the US debt. What are your thoughts on Donald Trump's recent statement during a CNN town hall where he appeared unconcerned about the debt ceiling and encouraged Republicans to remain steadfast?
One more thing he doesn't know very much about. Let me put it in two categories. One is actual default. That is potentially catastrophic. And you can go through a million ways, but anyone knows that's potentially catastrophic. And I don't think it's going to happen because it gets catastrophic. And the closer you get to it, you will have panic. And so the closer you get, you have markets get volatile, maybe the stock market go down, the treasury markets will have their own problems. It's amazing you already have certain T-bills trading at 3% and right next to them 5%. This is not good. And people should remember the American financial system is the foundation to the global economic system, and the closer we get, more panic. We might get downgraded. The last time we were downgraded, we had like 65 or 70% debt to GDP. Now it's 105. Now our deficits are 2 or 3 times that we had back then. So, we better be very careful. And I wish we didn't get there at all. I'm respectful of both sides. Who, one side wants to use it to make up for. We got jammed down their throats. And I would love to get rid of the debt ceiling thing, but please negotiate a deal.
Do we think that ultimately it'll be the markets that spur the deal agreement, where panic ultimately forces the conclusion?
It's a really bad idea, because panic becomes something that is not good, and it could affect other markets around the world. But yes, at the end of the day, if it gets to that panic point, people have to react. And we've seen that before. And the other thing about markets is always remember, panic is the one thing that scares people. Like they take irrational decisions. I remember even in '08, people were selling certain securities at 40% of what they would be worth if we had a Great Depression. But they were like, I want out, I want cash, I'm not betting my family's money on this or my company's money. People will panic, and again, we gotta be very careful about getting close to a situation.
How are you preparing for the situation upcoming?
group of people who are very smart, who are looking at, again, it's very unfortunate, it's time consuming, hopefully it won't happen, but it affects contracts, collateral, clearinghouses, clients. It affects clients differently around the world. You have to then anticipate what people are going to do, which is very different than the legality of it. And and the closer we get, the more those kind of that war room will start. Now it's taking place once a week, but my guess is sometime call it May 21st, it'll be every day. And then it'll be 3 times a day. And then it'll be much more conversation with clients about what they need to do to help to get them through it and things like that. It's very unfortunate. It should never happen this way.
Dimon emphasized the potential catastrophic impact of a default on the US debt and warns of potential market panic. This highlights the importance of preventing such a situation from occurring. He acknowledged that the debt ceiling issue affects contracts, collateral, clearinghouses, and clients globally. This indicates the widespread impact of the US debt situation and the need for global cooperation. He stressed the need for preparation and planning to minimize the negative effects of a default, highlighting the importance of proactive measures to mitigate potential damage. He mentions a war room and increased conversation with clients indicates the proactive measures that JPMorgan Chase is taking. JB Dimon mentions JPMorgan Chase had a good look at First Republic Bank before acquiring it and found that they did some things really well, such as maintaining a great culture and pristine credit. He emphasizes that JPMorgan is not the type of company to come in and impose its way of doing things on the acquired bank.
And in reality, look, they did some things really well. Like if you talk to their customers, I'm getting calls and emails and great culture, great customers and things like that. Their credit is kind of pristine. That's good. So, of course, we marked all the market, and we're all in very good shape. We've hedged all the interest rate exposure together. We've got thousands of people now going out, learning about what their best is. We want the best of both. We're not the kind of company that comes in our way or the highway. And so there's no surprise there. It had to make sense for shareholders, but, this notion that it was an unbelievable thing, no, it was a nice thing for shareholders. That's I have to do that. But we also really did it to assimilate the banking in a way that's very safe for the system, and it didn't cost uninsured depositors, it cost the FDIC as little as possible. But I also want to point out, I'd be fine if they want to change the rules a little bit to make it easier for a regional bank to buy a big bank. We need healthy big banks. We have the best banking system in the world. Banks are becoming smaller and smaller as a part of the global system. So when they look at banks, they say, oh, it's big. But when you look at the banking system to the system, mortgages have left, a lot of private credits left, certain trading functions have left. A lot of things are going to leave. You have Apple, you have the neobanks, you better be a little more thoughtful about when you say we mean banking per se.
Should Americans be overly concerned about financial consolidation being primarily in the hands of a few large banks such as JPMorgan?
No, because most of our size accrues to our clients. So if you look at, we do small banks can't do. We do like banking large corporations in 50 countries around the world and move $10 trillion a day. It's hard. So these are big complex things. We're not big and complex as we want to be. Big and complex because the people we serve are big and complex. We bank countries, the World Bank. We do a lot of things. And yes, we also bank consumers in the United States. But I want the community banks to thrive. I mean, like I said, we want to do everything we can to help them. We didn't want this to happen. We didn't cause it to happen. The second it happened, we knew it was bad for all banks.
Is JPMorgan too big to fail?
I don't know what that word means anymore. I mean, we're not going to fail, and I don't know what that means. But we certainly didn't mean it to be an advantage. So we've asked all our people when this crisis happened, I don't want anyone soliciting any client or any banker from any bank that's regional bank or community bank, etc.
Jamie Dimon asserts that healthy big banks are necessary for the best banking system in the world and that the US should not fear too much finance consolidation in the hands of a few big banks. He also points out that JPMorgan's size primarily accrues to its clients and that they serve large corporations in 50 countries around the world. So Dimon is hesitant to define what too big to fail means, but he asserts that JPMorgan is not going to fail. He also emphasizes that JPMorgan did not intend to gain an advantage from the 2008 financial crisis, and that they have asked their employees not to solicit clients or bankers from other banks.